Alrighty. So let's see what's going on today. So having a nice strong up day. I think I'm gonna let everyone start to pile in a little bit. If anyone's out there, thought I would just hop on, do a little quick stream, midday stream. So yeah. So it looks like AMD's moving higher, which I'm kind of surprised it's moving up today. Kind of funny how NVIDIA is kind of lagging behind after earnings, and AMD's just outperforming massively against NVIDIA today. It's just one day, but we had a nice bottom wick on NVIDIA. Looks like it's being bought up a little bit. I like to watch the 9 EMA just as a point of reference, as an area of support and resistance. It's not the end-all be-all, but just watching NVIDIA, if you were bullish on it and you wanted to buy NVIDIA on a dip, probably would be a good time to do so. I'd even argue earlier this morning was an even better time to do so. NVIDIA can be a little volatile, and yeah, it looks like it's buying back up. So good day to buy NVIDIA if you are bullish long term. But AMD outperforming, doing the exact opposite of what NVIDIA is doing. I think NVIDIA will recover, though. I think it's just a little bit of news and earnings call stuff going on, but in the long run, it's not going to really matter that much. You can't put too much weight on a stock for one day of performance. It's just one day. I think AMD is like ready to break out. This thing is just going. I was kind of surprised that we had this sort of response on AMD today. I thought it would be a more a quiet day for AMD, but it's the exact opposite. This is actually one of the strongest days for AMD we're having in quite a while, probably since Friday. So what is that? About 10 days ago. So we're having a nice strong day for AMD, and as you know, I show real P&L. I have my trades up. I do post my trades. So this trade right now on AMD is up 331%. So looking pretty good on that. Really happy with this position this month. I mean, kind of knocked it out of the park so far, but we'll see how the next few days pan out. So looking good. So I will be posting a video explaining. I wanted to go over a couple topics actually. I got to start making a list because you guys suggest a lot of good things within the comment sections of my videos and on streams. I really like to get your feedback. But I want to go over a couple topics, probably in a video, 2 videos. Well, one, my new trade for December. I will be issuing that. Letting you guys know in time, so if you want to tag along with my strategy, you can. But I also wanted to go over the concepts of implied volatility, which I think needs to be addressed, because implied volatility, if you don't know already, is a huge factor with your profitability within a trade. Implied volatility can make or break you. But I should have addressed this on my stream on Sunday, because I was getting great suggestions, like for certain stocks that do very well for certain months, big gains. But here's the thing: You can have a stock that does great for, let's say, the month of December. It goes up 20% on average in the month of December at a 80% rate, which is great. Like, that's good edge. But if implied volatility is too high or it's historically higher for that period of time when you enter, as an options buyer, you can actually hurt yourself, because you're paying a higher premium, and that higher premium can really hurt you. So even if the stock goes in your direction, um, you could still lose money or not make a lot. So that's why I was talking about like switching my stock for December, but I think I'm going to stick with Eli Lilly as I originally planned. I'm just going to stick to my original plan, because I've already backtested that stock, and it tends to have a lower IV, and that lower IV just makes or breaks you. It just makes a huge difference. So I really suggest, um, you know, even if you find a stock on your own that does well for a certain month, backtest it and make sure that even though it goes up a lot, doesn't mean you're necessarily going to make a lot of money on an option, because you could take two different stocks and one of the stocks goes up 5% and you can make 100% gain on your position. And then you could take the other stock, it goes up 20% and you only make 25% gain on that options position. And that's because of implied volatility. So like with options, this is where a lot of people get hurt, and you have to understand these concepts. These are, you know, kind of complicated, financial instruments. So you have to be careful and pick carefully. Every stock that I pick, I try to pick stocks that perform well, have statistical edge, but also when I backtest them, they meet other criteria in terms of implied volatility. The spread between the bid and ask price could be a huge factor. Liquidity, especially. So you gotta have some independent research. Don't rely on someone else to just tell you if something's good or bad. You have to understand the product that you're trading, especially with options. Now, with trading shares, if you're trading shares alone, you don't have to worry about, or futures too. You don't have to worry about theta or implied volatility or anything like that. Right? Then you can actually use, hey, the stock goes up 80% of the time in the month of December. I'm going to buy the shares of the stock. Then, of course, you're probably going to do better in regards to following the statistics solely. But with options, you need to backtest. You need to, factor in theta and bid and ask spread price. You have to factor in implied volatility, like I was explaining. So yeah. But today is a good day. I wanted to just do a stream just for a little pre-Thanksgiving stream. Things are looking pretty good for today. We're up 3.45%, which is a little surprising. I was just saying before, NVDA, man, like NVIDIA had a good earnings. Let's just take a look at it, because NVIDIA is a close competitor to AMD. So, but you can see NVIDIA beat their earnings by 20%. I think their revenue came in slightly lower than, well, not slightly lower than expected, but it came in a little bit lower than most people liked. But I think NVIDIA is just having a temporary sell-off. It went up a lot over the past month with AMD, but AMD's outperforming NVIDIA massively today, and we're pretty close to hitting new highs. We're getting close. Excuse me. So yeah, I'm gonna be releasing my new trade for Eli Lilly. I will be posting that here soon. I'll probably post it next Tuesday, Wednesday. I like to post a couple days before I get into my trade. So make sure, if you want to follow along, just hit the subscribe if you haven't already, and just make sure the bell notifications are turned on so you're notified as soon as I post a video. Um, so yeah, but Eli Lilly, let's see what Eli Lilly's doing. It looks like it's like getting into this little tight range here. Where it's gonna break out, I don't know. Probably to the upside, most likely to the upside. But no one really knows where it's gonna go. But typically, Eli Lilly does well in December. So with that information, I'll be taking my trade as planned. But AMD, another thing to note, I know this week isn't over yet, but AMD is up 4 weeks in a row, which doesn't happen quite too often unless we're in a bullish phase of the market, which I think we are right now. Momentum is kind of fading, not really, but we'll see. Just hoping AMD holds out for another week. I'll be closing this trade on the 30th as planned. And yeah, hopefully we close out November with a nice gain. We're made a little over $4,000. Well, technically you never make until you sell. So, but right now my profit is $4,300. We're up 324% on that position, so pretty good. But I'll be posting a video. I don't like to post videos of me actually trading. I guess I could. I just don't want to reveal any private information from the actual executions of the trade. But I think it's pretty clear that this is a real account. I think the only way to know if this is a real account is if it says connected in real-time data. So I don't know. You can see where I entered my trades as planned. I stuck to my strategy and entered on the last day of October and held through this entire month so far. And we're up. We're up good. We're really deep in the money, which is nice. I like being deep in the money. I think a lot of people made a money. I think a lot of traders and investors made a lot of money this month. November is usually a great month for the stock market. Usually October is a decent month too, but October was kind of lackluster. But November seasonality definitely kicked in this month, and it feels good. It feels good because I think a lot of people got hurt. Between like August and September and even October. I got hurt in October. Lost a little bit of money on Apple. If anyone was following those trades back then, I posted them. I post my gains and my losses. I'm completely transparent. This is how trading is. It's real, right? Like losing is part of the game. Trading, it all comes down to risk and reward and your win rate. Really, that's all it comes down to, and then following your strategy. So. But this is a nice gain. This is actually one of the best trades I've made so far. I'm sure I'll have better ones though. Based on my back testing, I've had some crazy gains in 1 month. But they come and go. They don't always happen, and I lose sometimes. So yeah, no problem, man. Thank you. Yeah. Yeah, you know what it is? It's just like if you look around on YouTube, there's just so many people who aren't transparent, and it's kind of sad. It's a little surprising that a lot of people fall for it too, but you know, it's nice to be transparent, and especially towards beginners, because this is basic, and not only beginners, but people who are still learning and have been trying for a while to trade. It's nice to show them how it really is. Like I'm you guys know me. I don't really try to scalp or day trade anything. I try to just my trading is pretty boring. There's really not much to it other than research and backtesting. Um, which I think any trading strategy, most of your work is done on the backside. Through research, backtesting, backtesting more. You gotta you got to really make sure that what you're doing is working and over a period of time, because if it's not, then you're just wasting time and money. Um, and I feel that a lot of people waste their time and money because they're not focusing on the right things. They're focusing more on the clicking of buttons and what the actual stock is doing in the current moment, instead of just like taking a wide view, a top-down approach, and just saying, hey, like, looking at a monthly level and then going from there. Starting high up and then pinpointing down to what you want to do. It just makes for a better trading plan and overall better trading, in my opinion. So yeah, so if you wanted to trade multiple stocks per month, I don't see any problem with it, as long as the strategy makes sense and you back test it and it works. Yeah. Um, like I was in AMD for this month. You could have gone into basically anything this month, really. You could have gone into NVDA this month instead of AMD and done well. Um, Same thing, maybe not Eli Lilly, but definitely Apple. Look at Apple. Apple, you probably would have done very well with. Um, so if you feel like you want to diversify your trades, or split up your risk among different stocks, like, and those different stocks that you want to trade make sense from a statistical standpoint, and you have proof of them working in the past, by all means, I don't see any issue with it. Not financial advice, of course. I'm not a financial advisor, but um, you know, if the numbers make sense, then more than likely you're gonna do okay. Um, and I encourage people to put their own twist to the strategy. Um, I know someone was saying, like, or a couple people were saying, like, man, I would be closing out that position right now at 300% or 200% or 100%. And I agree with them. Like, yeah, if that's how you feel, if that's what you feel like you should do with the trade, then do it. Like, I'm not here to tell you what to do exactly, and I'm just here to show what I do, and that's it. Like, I'm not really trying to push my strategy on anyone. Um, and I've come across a couple people who disagree with what I do, and that's okay. Um, so yeah, to each their own. I mean, there's so many different ways you can make money in the markets. Um, but each way to make money in the markets, some people prefer it more than others. Just comes down to personality, in my opinion. Um, hey, monkey. No. So my stop loss is the amount I risk in my trade. You could use a stop loss if that's what makes you feel more comfortable. Um, but let's say I have $10,000 and I want to risk 10%, so $1,000, and that's what I'm willing to lose on the trade. Then that's my stop loss. Just it makes it a lot more simple, because and here's the other thing with using a stop loss, which is okay. If you want to use a stop loss, it's okay. But you could also be shooting yourself in the foot using a stop loss, because you can put on the trade, it goes against you right away, and then 2 weeks later it's up, 100%, and you missed that opportunity. So, in my opinion, if you're using a stop loss, in my using my strategy, right? If you're using a stop loss on a certain amount of risk that you're willing to lose, then that means that the risk that you're putting on is too much. Like, the money that you put into a swing trade, especially with options, right? So, like, this trade, I put in, I think it was like $1,300, but you could see I bought this contract down here. The trade price was $4.47, so $447 times three. I bought three contracts, but that's the money I'm willing to lose on this trade. So, there's no stop loss involved here. This is my stop loss, the amount I risk. Yeah, and putting a stop loss on an option is difficult too, because one bad day can just blow out your stop loss, and then because options are so volatile, or they can be volatile, so you got to be careful with how you use your stop loss. Your stop loss can get hit even if the stock does nothing; it just trades flat for a whole month. That theta and that and possibly IV crush can make you hit your stop loss. So my honest opinion and my honest suggestion. Again, this is not financial advice. I'm not a financial advisor, but you know, you should try to think of your stop loss as your total risk on the trade. If I'm gonna risk $200 in a trade, that's my stop loss, right? Like, because an option can go to zero. So you already have being an options buyer, you're already defining your risk of the trade. Your risk is already defined, because the most I can lose on this trade, for this trade on AMD right now, the most I can lose is $447 times 3, which if I do the calculation, 447 times 3 contracts, the most I can ever lose on this trade is $1,341 plus commissions, which is like 65 cents per contract. But your risk is already defined, and you should be okay if you're risking an amount you're willing to lose. So yeah, so I was just talking about that before, Helix. So I was doing some back testing on the stocks that you guys suggested, and here's the thing. I failed to mention the concept of implied volatility. And the problem with AVGO, now I didn't check gold, Barrick, but I did check AVGO. AVGO has high implied volatility, which if you know a thing or two about options, you preferably want to be an options buyer when IV is historically lower, because the premiums are cheaper. And when the premiums are cheaper, you have a better chance of making money on the option. When IV's higher, you can have, so like we can backtest, because let's backtest this. Let's take a month from AVGO, because I kind of want to make a video on its own about this concept, because it's really important. And this is another reason why you need to understand options fully, and you can't just look at you can't just look at like this, like AVGO, and just like look at it and go, okay, over the past 14 years, AVGO does really well in the month of December. That means it's good. Like, no. Like, hold your horses. Hold on. Like, let's look at the actual options chain data and see if there's actual edge within options, because this edge is only at a share level, right? Like, if you bought actual shares of AVGO, then you would probably do okay. But with options, remember, you have IV, you have theta, you have, a few different things working against you, potentially working against you, that can cause you to lose money. So, like, let's look at AVGO. Let's go to a month that is a good example. So let's take this month right here. This is a perfect example. I guarantee you we're not going to make money on this trade right here. So I'm going to remove all the indicators. And you can see right here, December 18, AVGO, we went up 8.23%. That's a pretty good gain, right? Like, we shouldn't be able to make money on an options contract, right? Well, let's find out. So let's go to December 2018, or technically November 30th, right? Because I like to enter on the last day of the previous month, around the last 5 minutes of the day. And I'm going to show you guys something, and then I'm going to show you Eli Lilly, which is a lower IV stock. But this is AVGO, November 30th. I'm going to go to the closest thing, that's 45 DTE, so I'm going to go with the 49 DTE. And I'm going to pick whatever's closest to around 45 delta, which is right here, 48 delta, and we'll just buy one contract just to keep things simple. All right, so we're in the trade, right? We're gonna fast forward to the end of December, and remember, the stock went up 8%, 8.23%. So let's see how it did. It only went up 69% on an 8% move. So, like, it's and you could see here IV. You could see IV's 35. If we check the IV back in November, I think the IV was higher. Let me check. Yeah, 56. So we had IV crush. I'm sorry. So the IV implied volatility, I think, did go up. So this was actually a good month. But if you look at AVGO on a chart, and I think I have implied volatility. Let's go to, is this 18? 17, 18. I think this is 2018 right here. You could see, like, if you look, and this is another reason why, like, you should look at implied volatility on a chart. Like, you want to see, like, where implied volatility tends to peak and trough, and try to see, like, where an average IV is. Because, like, I want to be an options buyer on AVGO when IV is lower, because that means I have a better chance of. Now, high IV doesn't necessarily mean you're going to lose money, but you got to be careful with it, because IV crush is probably the fastest way to lose money other than theta decay. Other than time decay, IV crush is really bad, and you can get really hurt from it. So we can get IV info only with backtesting manually. Yeah. So, like, the best way to know if IV is going to be an issue for you is backtesting the stock, and that's why, like, I don't just look at this. I don't only look at this, but I also, and not only do I look at this and the actual chart, but I'm also looking at this down here, this implied volatility area on the chart. And I want to see, is IV historically high? So, like, right now, look at I think this is up to date. Let me go to a shorter time frame. So, like, if you look at AVGO right now, look how high the IV is. And implied volatility means that the market's expecting a big move on the stock, either to the upside or downside. That's what implied volatility means. So right now, AVGO, the premiums on AVGO are priced in for a big move. And if that big move happens, once the big move actually occurs, this IV is going to drop. And you could see, going back, you could see IV was low for last year for AVGO, but you could see IV went up, 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 up. And usually IV goes up when the stock goes down. But, you know, IV could still go up and the stock price is going up. So, like, you got to know how to play it. The best way to know if IV is going to be an issue is just backtesting. If the backtesting's good and the IV isn't an issue, then you'll know. So yeah, I won't ramble on any further about that. But I will definitely make a video, a better informed video about implied volatility. And also, there's many videos on YouTube explaining it, but you have to be aware of implied volatility. Yeah, IBKR, I know they're a great broker, but I don't know if they have, like, the backtesting, like the on-demand, like TOS. If they do, let me know. But yeah, Thinkorswim, I like Thinkorswim, because I think it's still a good advanced platform, but tailored for beginners and people who are more retail. And it also has great tools. I think Thinkorswim has been around for a while now. So, I'm just going to make sure I don't share any information there. Okay. All right. So, like, AVGO, like, and the thing is, like with high IV, you could still make money in a high IV environment as an options buyer, but you could be handicapping your gains because IV's high. So try to find stocks that have good edge for a certain month, but also have a lower IV, because if it has a lower IV, you're putting the probability of a winning trade on your side, in my opinion. And this is just an opinion, and this is what I'm saying this because this is what I've seen from backtesting. That's all. IV on UNH. So like this is perfect. So like IV on UNH. Let's go to the 58, and I'll condense these options. Yeah. So like implied volatility. So there's two areas where implied volatility is. You have this right here. This number 19.56%. You can see when I hover over it, it says implied volatility. Usually, in my opinion, what I've found, usually IV below 30, 25. If it's a tech stock, I would say like 30 is like a decent area to be in for IV. UNH is not a tech stock. UNH is a slower moving stock, so naturally its IV is going to be lower. So you can see IV is around 20, 19.56. This is a good IV. Like implied volatility for UNH is good. As an options buyer, I would feel comfortable with this IV. And UNH, I have backtested. It does well. Like UNH is a good stock for December for an options, because IV is lower. You can see the actual IV for like a 47 delta is 17%, so slightly lower. This percentage right here, I think, is more of an average of the options chain. So yeah. On gold, yeah, we could look at IV on gold. Yeah, so you can see gold IV is higher. Now, here's the thing with gold. Gold's been going up, so you got to be careful with that. But like we could look at a historical, and this is where like looking at historical IV is better. So like if we look at a chart of gold right here, you could see IV right now is pretty much, if we look at a higher time frame, so IV's right here. IV's technically on the lower side right now. IV is lower. So yeah, I would say IV for gold over a period of time. Can I look further back? I don't like TOS charts. I don't really use it that much. I find it to be a little clunky and annoying. Trading view charts are way better in my opinion. How do I go further back? It's not letting me. What is this? 2021. No, I want more data. Can we go to a month? No. 3 years? Ah, here we go. Yeah, 20 years. Give me as much data as I can get. There we go. So IV right now, like this is like 20 years of data on gold. IV right now is historically lower. So I would be okay with gold for IV. Yeah. Yeah, and they're like the gold miners, they don't move. They can move a lot, which if you haven't I've been watching gold, I thought gold would be way higher, but gold has been moving up. It had a really good month in October, which is weird. Gold usually does well in September, but that trend hasn't been playing out. So, and you could blame some factors on that. You could say, oh, it's cryptocurrency, or gold isn't used as much. I don't know. That's more opinionated things, but I saw gold over 2,000 yesterday, right? I think it was yesterday. Gold was over 2K. Yeah. Yeah, it closed just under 2,000. But like I have a list of gold miners right here. AGI, GFI. I think I have Barrick Gold right here, yeah, on my list. So Yeah, these stocks, if gold spikes, these stocks do very well. Like they can go up 10, 20% in a day. I've seen it. And that's why I like them. But gold has been disappointing me actually over the past like 3 years, 4 years. So it like went up a bunch during COVID, and then that was it. It just like it's just been oscillating ever since. And right now it's at the higher end of its range. Like it went up. Let's look at it on a monthly chart just to get a good wide view. Like it went up, 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 and then like summer of 2020, it's just been ever since like 2020, summer of 2020, it's just been bouncing back and forth. But it may finally break up higher. It looks like it made a higher low here, higher low, higher low. I mean, technically this was a lower low if you count this, but who knows? It's just this is technical analysis if you're looking at it that way. One can argue it's like, oh, this is a reverse head and shoulders, right? You have a shoulder here, the head, the neckline. I think the neckline's technically here. Reverse head and shoulders. That's bullish. Like, who knows? I've looked at all these different theories and ways to interpret charts, and it's all hit and miss. GDX, was it the junior miners? Oh, the VNEC. Yeah, we can look at the IV on that too. GDX. Peter Schiff's probably happy right now. Gold's about to cross 2K. He's been pounding the table on gold for years. Yeah, so IV's lower. I'd say, if anything, IV compared to like 2018, 2017, IV's pretty much at its average right now for GDX. But that's probably because GDX is more of a diversified, it's an ETF, so the chances of it going up are higher, so people are anticipating a move to the upside, so IV. But right now, IV is lower. Let's check the actual IV for GDX. Yeah, so it's around 25. You just gotta be careful with these, and this is why, you gotta backtest. You gotta backtest gold or GDX over 10 years and see what the profit and losses are. And if you feel comfortable with them, then actually put real money at risk. Yeah, I know. I used to listen to a lot of his podcasts. I haven't been listening to him I haven't listened to him in a while actually, but yeah, his whole thing with the debt and federal deficit and all that stuff, I completely agree with. And I think that's becoming a bigger issue, especially with the debt to GDP ratio. I think it's almost at 120% now for the U.S., which is crazy. It's one thing if you have $30 trillion, $33 trillion of debt, but your GDP is high, right? If the GDP outweighs the debt ratio or the amount of debt, then it's okay, but because it's all relative. But that GDP ratio, if it gets higher and higher, which means that the debt is surpassing the GDP, then that's no good. That's not a good sign. Where are we sitting at? 330% gain. If you guys could leave a like on the video so we can get more people in here. I've been trying to grow the channel. I like to share my strategies with everyone and be transparent with my trades. Not many other YouTubers out there. I do know a couple that are transparent, but yeah, it is what it is. So usually I don't do streams at this time of the day, but I got a half day off of work and kind of just relaxing right now. I thought I'd hop on for an hour or two and talk to you guys, and especially since we're having a good day. At least I'm having a good day with AMD. So, but I appreciate all the support. Yes, I've been thinking about shorting, or buying puts. You got to be careful using the term shorting in options because when you say shorting, you mean selling options. I have thought of the idea of buying puts on stocks that perform bad for certain months. So yeah, I've yet to do research, like pick actual stocks, but yeah. The only thing is, here's the thing with going short or buying puts. Um, Usually the sell-offs are short-lived. Stocks tend to rise more than they go down. I mean, that's you could just look at the S&P 500 to know that. So like if I were gonna do a put strategy, I would probably not hold for 30 days, believe it or not. I would probably look to buy on a seasonally weak month and then take profits at 50% gain, 100% gain. Be a little bit more methodical, be a little bit more quick on the trigger to sell and take profits. Just because I know that puts, or sell-offs are in a bullish market like we have right now. Uh, Sell-offs are usually short-lived. So, the reason why I like to stick with 30 days in a long call is because I know that stocks tend to go up over time. So, it's easier to, keep a more systematic approach for call options. But with puts, you got to be easier. Like, you got to be careful with. But you can make a lot of money with puts, especially, you can have a move like this. You go down, and this is on a daily, but if you go down, let's say 17% in 10 days, like you can make a lot of money off of puts. Puts do pay out nice, but it's hard. Puts are harder to be correct because you're going against, especially with a stock like AMD or like NVDA, a very strong bullish stock. Um, it's hard to be correct because options, you have to be right about the direction, but you also got to be right about the timing. Timing is like the hardest thing with options. And then you also throw in implied volatility. So you got a few things. There's a reason why. Like, yeah, I made 328% so far this month, and we'll see how the rest of the month pans out. But the reason why my percentage gain is so high is because I'm taking on a lot of risk in terms of the odds being against me, right? Like, I have theta working against me. I could potentially have IV working against me. I can have the underlying stock working against me, right? If the stock price goes against me. So, like, all those things, all those risks have to make, like, you have that, this reward of 300% makes up for all the risk that I'm taking by being an options trader. And that's why this business, like, this is not easy. Like, this is not an easy business to be in. Um, it's very emotional. It can be emotional. That's why I think, you know, backtesting, logging all your trades and backtest data into an Excel sheet and having that statistical confidence backing your ideology or your strategy will put you so much further ahead. And it lets you hold trades like this one that I have this month, right? Because I know historically how AMD performs in this certain period of time. So it's just the power of statistics. That's about it. So yeah, Monkey, good point. So if I wanted to, like with this trade, if I wanted to make this a real like risk-free trade, I would take the amount I risked initially. So this trade I bought for $4.47, 3 contracts times 100 shares, of course. So $1,341 I put into this trade. If I wanted to right now, I could sell 1 contract for $19, so $1,900. So I take $1,900 off the table, so now I covered my cost, and then I could just leave the 2 contracts remaining. I'll leave those running for potential profit, further profit. That's one thing you can do. I didn't do that, obviously. But yeah, like if you want to get fancy with risk management, you could do that. My risk management is the amount I put into the trade at the beginning of the month. So like right away when I get into the trade, my risk is already managed. So it's like whatever happens from here on, it is what it is. Like I'm just letting the market and statistics be my edge. That's my edge is seasonality and the market itself. The markets perform better and worse during certain times of the year. There's years when my strategy will only return, you know, still can return a nice gain on the overall portfolio, but then there's years like 2019 and 2020 and 2021 where like the gains are just crazy because the market is just so much more volatile. There's so many more people trading. The volume is so much higher. So really like my performance comes down to what the market is doing. I mean, and that goes for any strategy, I feel like, right? If the market's moving up a lot and your strategy is a long strategy, you're going to be making a lot of money, and vice versa. So, good question. I think I got to get a new mic. This mic is like a little too sensitive, I think. It's a headset mic, so it's clear. I know you guys can hear me good, but I think it's a little too much. So I may have to get like a nice mic with a pop filter, just so you don't hear my breathing so much, and it would probably be a little bit nicer for your guys' ears because I'll edit my videos and listen to my videos, and it's just like, man, like my mic needs to be dealt with. So I may have to. If you guys have any suggestions or have any mic suggestions, let me know. But I'll probably go with like a Blue Yeti or something. Probably, I don't need to spend that much money on one. Probably buy one for like $80 or something. Find something on Amazon. Use some of these profits. Use some of these profits to improve the quality of my content for you guys. Let's look at the chart. Actually, let's look at the S&P. So S&P is about to make a new high. We're looking at SPY right now. Very close to being in a positive new high territory. So it's crazy how the market just went from like low to high this quick. I mean, this month so far. This month is really good. I think a lot of people made a lot of money this month so far. I follow a couple other traders, and they're having good months, even with different strategies like scalping and day trading. They're doing well because the market moves are just so great right now, and I hope you guys are doing well too. Let me know if you guys like scalp or day trade, or you're strictly swing traders. I'm amazed by people who can scalp and day trade profitably like year over year and make a lot of money doing it. It's like amazing. I could never do it, I think. So yeah, it's just way too stressful. Oh, so let's look at the Qs. The Qs did make a new high, so they made a new high, I think, on last Wednesday. So that's good. The Nasdaq 100 is still yet to make a new high. The IXIC US Composite, this is the Nasdaq 100. Still yet to see a new high on that. But the Qs are higher. SPY is about to make a new high. It's looking good. Let's look at the rest of our stocks. AMD, of course, looking good. NVDA, man, NVIDIA is... I like to use the 9 EMA on the daily. I know I'm not like huge on indicators, but I do like the 9 EMA because it tends to show where the trend is going to continue and bounce off of. Like you could see here on NVIDIA, like we respected the 9 EMA all along here, right? And like respected the 9 EMA here and went higher, right? Now, just because you touch the 9 EMA doesn't mean you're going to bounce, but statistically, it's a good area to look at. So, like, If any of you picked up NVIDIA this morning when it was down here at like 470-ish, congratulations, because I think that's a good buy on NVIDIA. I think NVIDIA is about to go higher. And just looking at AMD today, AMD is about to touch higher too. So I think semiconductors are going to continue going up. Eli Lilly, that's going to be important to be looking at. I'm going to be putting on a trade for Eli Lilly for December. It does look like it's in some sort of like triangle here. Now, I'm not much of into my geometry too much, but something's happening here. Something's going on. Kind of looks like a rising wedge, which is bearish, but watch December seasonality prove a rising wedge pattern wrong. That'll be funny. Maybe that'll be the contest this month. I don't really put too much emphasis or care into patterns. And then the 9 EMA right now on Eli Lilly is like all over the place. Eli Lilly, kind of a tongue twister. I'm just going to start calling it LLY from now on. It's a lot easier to say. I'll just hope December goes quick and I could just go to my next stock that's easier to pronounce. But hopefully Eli Lilly I'm going to be entering on November 30th. Hopefully it's somewhere where it is right now. Hope it's below 600. If it stays below 600, I'd be pretty cool with that. Stay right below that psychological level. Let the December seasonality kick in, and maybe we'll see new highs by the end of December for Eli Lilly. Let's look at Apple. I think Apple is about to touch all-time highs. It's getting there. It's getting close. Watch that. I got killed on Apple last month. UNH. Let's look at UNH. I wouldn't say discard UNH. UNH is a good stock. I'm not trading it. It's just like I think it's a good stock for December. Let me check. Yeah, it's good. It hasn't been doing. Didn't do good last year. Did good 2 years ago. Did good again. So yeah, UNH is a good stock. And we looked at the IV before on UNH. IV's low. It's actually a pretty low IV. I think it's about the same as LLY. Let me check. So we'll look at IV. And of course, IV can change at any moment, right? Depending on what the market does. But it's around 17, which is pretty good. I like to see stocks like this below 20 IV. So let's look at LLY. Okay, LLY is a little bit higher. Yeah, around like 27, 26. Still within my criteria. I like stuff that's like around, depending on the stock. LLY has been moving up a lot, and so has UNH. So naturally the IV may be a little higher. But as long as it's not like crazy high, then I'm okay with it. And of course, you never know for sure if IV is gonna hurt you until you backtest. And I know with LLY, IV isn't an issue, so I'm comfortable putting on a trade with this one. And I would be comfortable putting on a trade for UNH. Even though I'm not, I would be comfortable. Again, not financial advice. So if you're going to go with it and you lose money, it's not my fault, right? But, I think UNH and LLY are in similar sectors. They're both in healthcare and pharmaceuticals and insurance. Well, I think LLY is more pharmaceuticals and UNH is more so healthcare and insurance. But they're still in that same health sector. So but let's look at a chart of, we have UNH up here. Yeah, UNH is about to make new highs. How's it done this month? Yeah, there's a good chance that UNH is going to break out. make new all-time highs for December. I mean, it looks like it's like prepped. Had a little sell-off between last month and this month, and now it's coming back up towards the end of this month. There's a good chance that, this thing is going to start breaking above 550 by the end of December. So, and price discovery, when a stock goes into price discovery, new highs, it'll go higher than you expect sometimes. So, but it could also be a point of resistance, right? New highs could also be a sell signal. But again, look at December for UNH. Does pretty good. It goes up 80% of the time for the month of December. So there's a really good chance UNH is a good trade. If I weren't going to trade LLY, I would probably pick UNH. Just based off of the chart, the seasonality. Alright, I think we're back up. Let me know if you guys can hear me. Sorry about that, my PC crashed. Good old Thinkorswim, messing up my computer. Sorry about that, guys. I will be entering SO, one contract. So okay. Oh, so you're going to enter one UNH contract and LLY? Is that what you're doing? Gonna diversify a little bit. Alright. I'm gonna have to hide my screen for a moment while I log into my brokerage account so I don't reveal any personal information. Yeah, that's probably not a bad idea. Alright, just one thing. When my computer crashes because of Thinkorswim, sometimes when I reopen the application after it crashes, it won't open. Then I have to uninstall the whole software, and so I may have my Thinkorswim may be down for the rest of the stream. We may just be looking at TradingView charts. So, but I'll try to get back in. And logging in right now may crash my computer again. So if it does, then we're just, you know what, maybe I just shouldn't even touch Thinkorswim right now, just so I could stay on stream. If we need to look at options chain stuff, we can look at Yahoo Finance or something. But you guys already saw my gains and stuff and where I'm at with my position, so. Let me throw up my screen one more time here. There we go. Actually, let's turn this off and close out Thinkorswim and turn this back on. Alright, cool. So you enter in the money or at the money. At the money call for monthly play. So I like to enter around that like 45, 50 delta, which is like pretty much one strike out of the money. So doing that juices up your trade a little bit. It puts a juicer. It juices your trade a little bit, gives you a little bit of leverage if you're right, and the percentage gain is a little bit more. And usually I'm right because, well, I'm not always right, but because I have statistical edge and data to back up my trades, I feel more comfortable going a little bit further out of the money. I had an epiphany last night thinking about like going further out of the money on these trades to potentially make higher percentage gains. And I kind of want to backtest it and see what it's like. It may increase my risk to reward, but it also will decrease my win rate. Because the further out of the money you go, the less likely you're going to win the trade. But with that lower win rate percentage, you're increasing your risk to reward. So instead of, like, my average risk to reward on all my trades is about 3 to 1 or 1 to 3. So every $1 I risk, I make $3 on average. Going further out of the money, let's say going to like a, I don't know, 30 delta. So that would be a little bit further out of the money. You know, you may be able to make like 5 to 1 or 1 to 5 risk to reward. Um, which, if you're gonna have a lower win rate, you should have a better risk to reward. That's typically how any sort of trading system works. Um, so yeah, good question. But yeah, I stick like one strike out of the money. That's my sweet spot. I like to have a nice, consistent, steady equity curve, but I don't mind the volatility either. So yeah, but if you go further out of the money, you're gonna have more volatile trading for sure. And then also going further out of the money, there's a couple other things that come into play. Then you have spread risk. So like the spread between the bid and ask is usually wider. That's why or like if you're going around like the 35 DT, you start running into other things. Like the Greeks start to play different effects on your trade. Like this is why you need to like really understand options and like always be studying and always be learning different option strategies. Even if you're not trading them, just learn about it because your mind is gonna better process ideas, and it just makes things a lot easier in terms of becoming profitable. So did anyone play NVIDIA last night? Anyone play with NVIDIA? It was kind of a lackluster trading session. Kind of just bounced up and down, and that was it. And then today we sold off, and it looks like it's buying back up in the evening. So, but I'm sure some people made money off of it. All right, I'll try logging into my Thinkorswim. I'm just gonna have to hide my screen for a moment. Just warning you guys, my computer may crash, so hopefully, fingers crossed. All right, didn't crash. We're on. All right, let me hide my private information, and we are up. There we go. Back in action. We're still sitting at 328%. It was crazy. Yesterday, I lost like, I think I lost like $650. So like this position went from like 300% to like 240 or something, and then today it like went up $1,000. So it's like kind of crazy. Sorry if you guys hear my fan noise in the background. It can get quite hot in my room. Luckily, it's a brisk day outside, so I'm able to open up my window and get some fresh air. Maybe AMD will see some new highs by the end of today. Let me look at 15-minute. Oh yeah, this is a flag. So yeah, again, I'm not like huge on technical patterns and stuff, but there's a good chance that AMD is going to be pumping into the afternoon. But it may not happen because it's a holiday. I'd be surprised if traders and investors put on more risk. They already put on a lot of risk going into the break. But we'll see. This looks like a bull flag. You got your post. Let's see. You got your post right there. Then you got your flag. And these things usually break out to the upside like that, but we'll see. This is on a 15-minute chart, so it's so hard to predict shorter time frames. How do you decide which seasonal stock you want to focus on? Good question. I look at the seasonality of the stock. So I usually stick with the top stocks on the NASDAQ and New York Stock Exchange. So a lot of the stocks I stick with are big cap names, just because you don't have to worry about liquidity usually with those stocks right away. It's easy to get in and out of them, and also they're fundamentally strong. So the chances of them doing some god awful dump is lower. It can happen still, but the chances of Apple dumping 50%, let's say, in a month are pretty low. That's unless some catastrophic event occurred. But so what I'll do is I'll look at the top, let's say, 100 stocks on the S&P on a stock screener, and then I'll come to this website, stockcharts.com, which is completely free to use. You don't even have to use a account. You just come to this website, stockcharts.com, you go to charts and tools, and then down here you'll see a seasonality box, and you type in the stock that you're interested in. Let's say I'm interested in Eli Lilly for December. So I type in LLY, and then I look. I look at the month of December. Since December's coming up, that's the month I want to trade. And I say, hey, Eli Lilly goes up 75% of the time. Goes up by a good amount. The average amount you got to take with a grain of salt, because you can have 1 year in December that was an outsized gain that kind of skews the data. But I know that 75% of the time Eli Lilly goes up, and then from there I'll backtest further in Thinkorswim, which is a great platform. I'll backtest in there over a 10-year period, let's say, and I'll see if the risk to reward, the win rate, the profits are worth it for that stock. Then I'll implement it and put on real risk. So yeah, that's how it. Not financial advice. Again, you could still lose money even if seasonality. Remember, like LLY, for example, only goes up 75% of the time for the month of December. So there's a 25% chance technically that I lose money this month, and maybe the stock does go up this month, but it only goes up by 1%. I'll still lose money because I'm using options. Options have theta, right? Time decay. You have implied volatility. You have a few different things working against you in the background with options. So, but yeah, that's basically the groundwork for my strategy. Pretty simple. I'll tell you what, I'm happy I had a good month so far. Hopefully nothing catastrophic occurs between now and November 30th. No problem, Joel. Good question. And Joel, I don't know if you've seen any of my other videos, but I enter on the first day or the last day of the month and close on the last day of the month. So I hold a trade for 30 days systematically, no matter what the trade does. So right now, my trade for AMD this month, I bought on October 31st. Right now it's November 22nd. So I'm still holding on to this trade for another 1, 2, or 7, 8 days. So I'll be closing it on November 30th. And the trade is up 326% currently. So like most people would probably take profits here, but like my strategy is my trade plan is buying and selling based on time, not based on what the actual gains or losses are. It just keeps things systematic, in my opinion. It keeps things just more systematic. It's you're less likely to make a mistake by doing what I do. In my opinion, that's just based on the way I backtest and do my trading. But if you put on a trade and it does really well within the first week of the month, let's say, and you want to take profits, you should take profits. I'm not here to tell you what to do, or everyone has a different trading opinion and strategy, and so theta does eat my profits. So if we look at the Greeks, you can see theta for my option right now is 5 cents. So every day I'm losing $5 on this trade. Of course, $5 times 3 contracts. So I'm losing $15 a day from theta. But you can see theta is not really much of a concern when you have an open P&L of $4,300. $15 a day ain't that bad when you're up this much. So it's theta I do watch, but theta is just it's the nature of the beast. That's just how options work. Theta is always there. So if anything, I'm more worried about implied volatility, and I'm more worried about the actual underlying stock, the share price going in my favor. That's what I'm worried about most. Theta is just a given. Like that's it. But yes, theta is eating into my profits. It eats into everyone's profits, no matter what strategy you have. Well, unless you short. If you're selling options, then obviously you're going positive with the theta, and you're making money off of theta. But I do kind of want to check out, maybe eventually, as time goes on, I may look into like credit spreads, playing credit spreads on like far out of the money credit spreads on these stocks using seasonality, or maybe iron condors. There's so many, like, this is the great thing about options is like you can do so many different strategies. Like if I wanted to, let's say, trade AMD iron condors, I want to pick like the most flat month. Like I would probably pick like August. Like August typically is a flat month for AMD. I'd put on iron condor and make money that way. Like there's so many different ways you can make money with options. It's great. I honestly think it's one of the best financial instruments. I'd say futures are second best, but futures you got to be careful with, because unless something blows out your stop loss, you can lose a lot of money with futures if you don't know what you're doing. Futures options are cool. I never really looked into like trading, like let's say corn or something on futures options. You could trade options on futures, believe it or not. Pretty cool concept. And commodities like oil, corn, soybeans, stuff like that. There's so much seasonality within those commodities. I mean, it makes sense. Like more people buy, let's say, corn during more people probably buy corn going into like the summertime, right? So like there's seasonality to so many different things, including equities, even bonds too. Yeah, Bill. Yeah, I don't trade them. That's the thing. Like I could probably make a video explaining them and like how I would approach it, but I don't trade them. I've traded plenty of iron condors on SPX, credit spreads on SPX, butterflies on SPX. I used to trade uh, index instruments before really getting into like equities. And I didn't do too well trading that way. I found a lot more profitability trading this way. Um, the only thing with trading like spreads, like credit spreads or iron condors or even butterflies, you have that risk of assignment. So like if you're gonna do it, like let's say I'm gonna sell an option or do a let's say I go to like a 30 delta and and I want to enter let's see. Let's say I want to enter at like a 35 delta on a credit spread. Like I'd receive $30 for risking $100. Well, technically $70 because the most I can lose on this trade is $70. But like if I confirm and send, you're gonna see here you have risk of assignment. It doesn't show it here, but you have risk of assignment if you sell an option. Uh, Now that risk of assignment isn't that great until you get closer to the expiration, but you got to be prepared to buy 100 shares of AMD in this case if you do get assigned. So like do the math. Let's say AMD is $123 when you get assigned times 100. You should have $12,000 in your account ready to go to back up that assignment. That's the one thing that people don't understand with options, like, or not the one thing people don't understand, but the one thing that can get someone in big trouble with options is getting assigned and not having the money to fulfill that assignment as an option seller. As an options buyer, like I like to do, you don't have to worry about assignment. The one thing you could do other than getting assigned as an options buyer is exercising the option, which means you take hold of the shares. Looks like NVIDIA is recovering. Is this going to look... This may be a V-shaped recovery on NVIDIA today. I'm shocked that it's still down with AMD up this much. AMD and NVIDIA are very closely correlated. I mean, they basically do the same thing. NVIDIA is better, though, in terms of their products, but AMD is not too far behind. But I think a lot of the sell-off was due to the China sales with NVIDIA. I think China makes up about 20% of NVIDIA's sales. So I think that spooked away some investors and traders, but I don't think it's really going to be a big deal in the long run. I mean, I was listening to NVIDIA's earnings call last night, and they were just going on like Mercedes and this company and that company and Tesla and Microsoft, and I mean like every company you could think of like is getting their AI equipment from NVIDIA. It's insane how much of a stronghold they have on the industry. So that's why like this PE ratio on NVIDIA, like right now it's 65. The forward PE is more like 30 because of its potential growth, which isn't really potential. It's like it's happening. It's definitely happening. I think the only thing that will stump this AI story is a recession. Something going on with the bond market, something going on with the U.S. federal debt, the Treasury. That, if anything's going to put an end to the AI bull run, it's going to be something with the government, in my opinion. AI's definitely staying. Like it's great. Hopefully it doesn't. AI doesn't remove us from society or something. Some crazy world. Who knows? Who knows what happens from here on? But hopefully we're not ran by robots. Is what I'm saying. A nice indicator I like to look at is the 9 EMA. Now I don't put like I said, like I don't really look at technical indicators that much, but I look at them. I'm a chartist at heart. But like whenever you have like a big move like this, like a breakout move like we had this November, like you always notice, and this is on the daily chart, you notice as soon as you get to the 9 EMA, like you bounce right off of it. Like we came down to it yesterday, we bounced right off of it, and you could find many more examples of that as for a bull run move. Like you can see, come to the 9 EMA, bounce, come to the 9 EMA, bounce, right, and like you can see here, it just rode the entire 9 EMA. It's not the end all be all though. That's the problem with moving averages. People put too much emphasis on it, and you know they lose money because they think it's going to bounce. But I used it yesterday. I was looking at this move yesterday when AMD went down, and I was watching the 9 EMA, and it wicked right off the 9 EMA perfectly, and it bounced. Evidently, it bounced so far. We're up 3.25% today. So. Um, I had my hold on. I had my not my my research. Let me just pull up my Excel sheet. Just don't want you guys seeing certain things on my Excel sheet. That's all. There we go. Eli Lilly, believe it or not, does pretty well for December in terms of gain. Now, it did well in 2019 and 2020. It returned like 400% and 300%, but that was during like COVID, so got to be careful with that. But even like 2021, it returned 140%. 2016, 144%. So the gains with LLY, they're good, but they're not as good as like AMD or NVDA. Like certain months I do better. It really just depends on like the seasonality and like which stocks, that you pick. I try to go for the stuff that's consistent because I like consistency on top of a good risk to reward because I use options. But yeah, I think LLY, the returns will be decent. I think they'll be okay if we do get a return. We may not. LLY could be a loser. Who knows? Like all you really can do is just look at the statistics, look at the history, and then make a decision from there. So, looks like we're getting a little bit of a sell-off. Let's look at the 5-minute on AMD. All right, so we may be coming down lower for the day. I'm surprised that AMD's up this much on right before Thanksgiving. Obviously, it had something to do with NVIDIA. Maybe investors saw more opportunity in AMD because of NVIDIA's earnings call last night. Maybe they heard something they didn't like. So some institutions piling in. Who knows? But to be fair, NVIDIA is pretty much at its all-time high. It did touch its all-time high, I think, like yesterday or the other day. AMD is still yet to hit its all-time high. All-time high for AMD is... Oh, no, I'm sorry. Recent high. All-time high is back here. But AMD, you could see, definitely has some growth ahead of it. Let's see, 165. So I think if we're going to close out this month really strong, I think 132 $132 on AMD is going to be my target by next week. But it may not. We may sell off by the time I close out my trade. Who knows? But this is the reason why I think it's going to hit 130 before December is because it's just like, if you look at AMD, it consolidated for a long time. Consolidated from basically in May. Consolidated this entire time. So usually the longer you hold down a stock like this, the greater its reaction to the upside. Especially, if the company itself is fundamentally strong and has like a good growth story behind it, which it does. I mean, AMD's got its hands all over AI, just like NVIDIA. So I think there's a good chance we keep going higher here because we've just been being held down for so long. And then right when I entered my trade, luckily, we spiked higher. So, yeah. And AMD did have good earnings. They did have decent guidance. So that also played a good factor into the stock price going up. So. Probably gonna hop off here in like 5 minutes or so. Gonna eat some lunch. Enjoy the rest of my day. So if you guys have any more questions or anything I want to look at, send them in now. I'll be happy to look at it. But I will be posting a video before the end of the month. I'll probably post a video. This is how I should do it. This is what I'm gonna do. Just to make it so everyone's aware, everyone has time to get in if they want to follow what I'm doing. This is what I'm going to do. I will post a video probably on the 29th explaining what I'm going to be doing for LLY. I'll post that video explaining what I'm going to do so everyone has 1 day prior to be notified. So, if you guys are going to follow what I'm doing, please, make sure you're subscribed, hit the bell notification, make sure all notifications are on so you're notified right away when I post a video. And then on the 30th, I'll post another video explaining my AMD trade, so the results of my AMD trade. So once I sell and get the official closing price for AMD, I'll share that. And then I'll also show you guys where I'm at with my LLY trade. So we'll do like a 2-in-1 video once my trades are executed. I'm not going to execute live on stream or like live in video. I'll just, I'll make a video after the fact. But yes, I will be posting 1 day prior. Maybe I'll even post on the 28th just so I give people a couple days, a 2-day heads up. My trades are kind of my exits and close are kind of spread apart. So, it's easy for someone to watch my video, like my strategy, want to follow along, and then they forget, right? Because it's been like 3 weeks, which is understandable because, everyone's watching other things. I get it. Life gets busy. So, that's what I'm going to do. I'll probably post on the 28th saying, hey, this is what I'm looking at for LLY, explain the trade, explain the process. And then on the 30th, I'll post a video of my AMD results and also show you guys where I'm at with my LLY trade, like where I entered, what I bought. And I'll also tell you what I'm going to be buying in that initial video on the 28th. So that's what I'll do. I think that's the best way I can approach it. And in the meantime, I'll stream just like I do. I try to hop on when I have time, when I have some downtime. I like talking to you guys. I like answering questions and rambling on. So yeah. But it looks like we're coming up on 2:30 here. Probably gonna log off. I really appreciate everyone showing support and asking questions. I learn just as much as you guys learn from me. Answering questions and getting me thinking. So. It's really good. I really appreciate it, guys. So yeah, I'll probably stream between now and the time I post videos next week. And yeah, until then, I will be in touch with you guys soon. So thanks for watching, guys. Talk to you soon. And I hope you guys all have a nice Thanksgiving. Happy Turkey Day. Alright, guys, I'm going to head out. Peace.